Good evening. I'm Peter Reznicek from ShadowTrader.net, and this is the weekend edition. Got a big show planned for you today, lots to talk about. I'm going to tell you exactly when the market is going to fall before the end of the year, sort of. We're going to do the usual deep dive on TA, S&P, and NASDAQ 100. I'm going to tell you the exact sector of the 11 S&P sectors that you need to be watching for next week to make sure that this market stays strong. And I've got a number one draft pick this week that I think is going to make you a lot of money in the near future. All right, without further ado, let's get into it. As I was alluding to in the intro, we have a lot of TA to go over, and I'm really excited for this section that we start off the show with what's really going on, because obviously what's happening in the charts is what's really going on outside of all the fundamental mumbo jumbo and everything the news wants to tell you. But before we get into that, I just want to do a little bit of an announcement here on something that's happening at ShadowTrader.net next week. If you've ever been curious about what goes on in our live trading suite, which are our two trading rooms, that is stocks and options and live futures day trading, this is your opportunity to come meet all of our moderators. Next week, Wednesday, October 23rd at 7 p.m. Eastern is when it's happening, and the link is right here in the Chiron. It's shadowtrader.net/open house. So you might want to save that now. No sign up required. It doesn't cost anything. Just go there on Wednesday, October 23rd at 7 p.m. All of the moderators in our two rooms are going to be doing very short presentations, about 5 to 10 minutes apiece, of basically what they do, what their edge is, going over some recent trades, and basically just talking about how they're applying their edge to make winning trades in this current market, right? So I hope you can join us then. Again, it's Wednesday, October 23rd at 7 p.m. Eastern, shadowtrader.net/open house, and we'll see you there. On to the TA, which is, of course, the most important portion of this program. That's why I always start with it. It's all what really matters. It truly is what's really going on, as opposed to all the fundamental mumbo jumbo and everything that you may be seeing on your TV screen. So let's get into these charts right away. We had a consolidation this entire week where the market didn't move too much. And we're going to allude to that a little bit later in the show in terms of action versus non-action by traders and what maybe you should be doing in this market. But I purposely boxed off the last 5 sessions here where you can see not a lot happened. We did make a new all-time high in this past week, but no follow-through whatsoever. Really, there was no expansion of range to the upside or anything. Right now, as all that was happening, I will say that we continue to remain above the 8 EMA. That's always your first line of defense as a buyer. The market is either going to be above the 8 or not. If it loses the 8, it probably goes to the 21. These are the two exponential moving averages that I look at. I don't really look at much else. As you know, I keep my TA very, very simple. 2 MAs and some trend lines. And to that end, the 8-period moving average on the EMA, it's constantly been riding here. There was just a little bit of breach here, but no real major closes below. And you can see we keep riding it. So what I want traders to be watching out for next week is to continue to see whether or not this 8 holds. It won't last forever. Eventually a market will break down below the 8, but right now it's not showing any signs of that, and it seems to be pretty strong. My personal MO right here, as the market is not moving much, is we've had some good success just selling calls in this market, right? Because they're a little bit more expensive as the market is going up. Also selling some puts as well, but using those structures that what we call net short, meaning net short on the call side, broken wing butterfly, unbalanced, etc., where we're still selling calls, but we've got long calls in front of them. So basically, this is to me the market where you don't want to be laying out a lot of debit, because usually debit in the market means that you need the market to do something in order for that to move. Now, obviously, there's pockets of strength all over the place. Stocks are going to be strong outside of the market. There's earnings plays, etc. But I like to think that everything is going to follow the broad market always, and I really want to know what the broad market is doing before I enter, and I want to make sure that it actually has some motion. And right now, this S&P is just sort of slowly grinding to the upside and not doing much else, so use a little bit of caution. I want to touch upon this NASDAQ 100 just for a little bit. We've been talking a lot in this program about how the NDX has been lagging the ES a bit and the S&P. This is really the same case here. The activity over the last week, I would say, was a little bit splashier, right? It was a little bit bigger ranges, as you can see from the bars. But again, what happened in relation to that 8 EMA? This is where things get tricky, because the liquidation breaks on the tech side here have been bigger than in the ES, and you can clearly see how much of a piercing there was over the course of the week below that 8 EMA. But again, just a piercing, not a holding. And this is what I keep saying, is that eventually this will break. You will get a daily confirmed close below the 8 that will probably take you closer to the 21. So just keep that in mind as you look at this. The other thing in the NASDAQ 100, as I've been saying, is there is this constant lag here in terms of space between where we are now and the all-time high. I'm going to touch upon that a little bit later in the Should I Do This Trade segment, talking about trades that are targeting that all-time high here at about the 20,700 in the NDX, but we're basically still not there. We're just basically lagging. It looks to me like this chart should go there. So I'm continuing to kind of bias long as carefully as I can in the NDX, thinking that the target at some point in the near future should at least be that 20,700 to at least test that all-time high. Now, the thought on everyone's mind has to be, are we going to see some volatility around the election, or are we going to see some volatility at all before the end of the year? And I got two things I want to show you here that I think you'll find very, very interesting. The first one is what's going on the monthly charts of the S&P. Notice that we have had green bars for quite some time now going up to here. But what I find even more interesting, right, is the fact that the trend lines are starting to fan out here. This is your primary, secondary, tertiary, and look at the fourth one here, how steep it is, right? The trend on the monthly chart of the S&P is just getting steeper and steeper. There's been absolutely no real pullback on the monthly for quite some time. Even the 8 EMA that we look at all the time is all the way down here, and the 21 is all the way down here. So you could be thinking, are we due? Kind of, but that doesn't mean we have to come down anytime soon. But I just wanted to start this longer term analysis with these monthly charts showing that basically we are kind of due for some sort of pullback. And I know a lot of people are thinking about what's going to happen in early November. So to that end, check this chart out over here that I want to show you. I did a little bit of a dive today. This was happening earlier today in the Weekly Options Advisory in my trading room. We were discussing what the volatility situation is looking out to November 8th, which obviously will be the Friday after the election. Election is on Tuesday, November 5th. What this is an options chain of UVXY, which, as you know, is like a leveraged ETF for the VIX, basically. And a lot of short-term traders use this to take advantage of volatility, right? These premiums here on the call side can really go to the moon when the VIX moves from, say, 20 to 40 or 40 to 60 or whatever in a larger down move. And what we were talking about this morning in my room is we wanted to see what was the situation of the UVXY in terms of larger traders positioning around the election, which would tell us, do basically larger traders think that a bigger rise in vol is coming? And if you look at this open interest here, which I've circled right here, in the November 8th expiry, the answer would have to be no. Look at how low the open interest is. No four-digit numbers, all in the thousands, 5 contracts there, 300, 142, 150, et cetera, et cetera. Very, very low open interest in terms of what type of commitment larger traders are making to the call side in UVXY on the series that happens right after the election, interestingly enough. Now, if we advance to the next slide, which is going to be the December expiry, this is the last expiry of the year in UVXY before the calendar flips, and look at what a different scenario it is. Look at these numbers here. You see thousands all up and down here at the 34 handle, 35, 37, 40, right? Right now, UVXY is about 26 bucks. Look at these upside bets that are being made in terms of that volatility will rise before the end of the year, but not necessarily around the election. Again, thousands of contracts, and you have to probably be thinking this is all buy-side activity, because it would make absolutely zero sense to sell premium on the UVXY, putting yourself at risk like that, not knowing if volatility can rip up at any time, right? There's geopolitical stuff going on right now. We do have the election, et cetera, et cetera. It just doesn't make any sense that these are downside bets, that these are premium sales. So I'm going to assume all of these calls are bought, and this is essentially a cheap way for larger traders to position themselves, looking for a bigger move to the downside and an increase in volatility before the end of the year. Time now for our sector spotlight, and this week I'm going to be talking about XLF, which is a financial sector. This one is quite important to the S&P and the broad market looking forward. It's 13.38% of the S&P currently right here, so it has a pretty heavy weight. It's actually the second heaviest weighted sector in the S&P behind technology. And what's going on in the chart right now, I think, is definitely noteworthy, and I just wanted to point this out to you. as a potential barometer for how strong this market, whether it's going to see a pullback or not. So again, relatively heavily weighted sector here in the S&P, breakout level here, 8 EMA here, and look at the overextension. I mean, it's just really pushed very high in the overextension. This is your bank stocks, stuff like Goldman Sachs, et cetera. All of that kind of falls under the XLF banner, if you will. And I just wanted to point this out, that to me, this sector that is relatively heavily weighted in the S&P is very toppy. So what I want you to be looking out for next week, see if there's any pullback in financials, and maybe a pullback in financials might signal a market that's a little bit weaker than it has been. We talked about those potential breaks of the 8 EMA. Don't know if that's going to happen, but regardless, I think this is the sector to watch next week in terms of, do we have a little bit of coming down, or is it just going to be a sideways consolidation? And again, that's also going to give you a lot of market generated information about this market, because when really strong instruments, sectors, stocks, whatever, are very high in range, away from all moving averages, and they don't pull back and they consolidate by time rather than by price, again, you've got market generated information at your fingertips telling you that that stock and that market continues to be strong. Time now for Should I Do This Trade? This is the segment that I hope is educational to people out there. I usually take a trade idea from one of my subscribers in Weekly Options Advisory, sometimes also via email. And today we are going to hear from a gentleman named Rick M. This came from my room earlier this week, and he was talking about buying a butterfly on the QQQ for next week, which would be the 21st of October, using the 493, 495, 498 strikes. So obviously that's what we call broken wing, because you can see there's $2 between 493 and 495, and there's $3 between 95 and 98. And that's why you see the little negative number here. That gives you a credit on the trade. So he wanted to buy that for 10 cents. My take on it was that this was not a good idea. However, what this did in my room is it sparked a very healthy discussion on what the trade should be in the QQQ and in the NDX that might be pointing us towards those all-time highs, as we were just talking about in the charts momentarily ago, looking at those all-time highs and how we could profit. So I don't think this is it, because I think this is a little bit too tight. When I say tight, I mean it's a little bit too close to where current price is now, so you might get a bit run over there, because you do have that little bit of upside risk. So what I was thinking here is looking at this QQQ, using this as a starting point basically. Again, if you look where we are here, right around 495, this is probably a little bit dangerous, as I was saying, where Rick had his strikes, because it easily could be probably in the mid-strike or maybe through and maybe not make any money on Monday. But again, the 503 is the area that you really need to be focused on in the QQQ for next week, because again, this is not the way I would do the trade idea, but I'm going to give you some ideas here on how I am moving forward with the QQQ and the index and what I think folks should be doing. So to that end, I ended up putting on this for Monday instead, which you can see is a little bit higher, 501, 503, 507. There's a little bit more upside risk, but what I'm also doing here is I'm putting it on as a broken wing with extremely cheap price, right? Look at the cost here, 4 cents on this spread and 5 cents here. It's essentially the same spread. I just did it in two tranches, right? So basically paying about 4.5 cents for the spread. And you might be thinking to yourself, okay, well, what's the point? Well, the point is that you don't lose any money if the market doesn't break out. But if the market breaks out, and we know that it's in a relatively tight range right now and has a chance to move higher next week, this will probably profit quite well and turn that 4 cents into 60 cents or whatever. And if the market doesn't move on Monday, I can rinse repeat the trade using Tuesday's expiry. And if that doesn't work, I can use Wednesday's expiry. And as I keep trying, what is happening here to my P&L? Nothing. I'm not losing anything. You see 4 cents, 5 cents, etc. And that's the beauty of these spreads. And I teach this all the time in my advisory. As always, if you want to join us, link down below in the Chiron, shadowtrader.net/options. So what am I doing as well with the NDX? I want to just stay on this chart for a little bit as well. Obviously, the same 503 area in the QQQ corresponds here to 20,700 in the NDX, right? So it's basically the same trade. One is on the ETF, one is on using the index. And to that effect, we also put this on today, basically using a $75 wide broken wing butterfly 20,625, 700, 850. The 850 is just there to cap off margin. It doesn't really mean anything. The driver of the trade is the 75 wide here. And as always, remember, and this is so important, this type of trade does not need to get to the mid strike for you to make money. It doesn't even need to make it to the low strike for you to make money. If there is a rally in the NDX next week, like right now, we know we finished here around 20,318, a couple hundred points higher in the NDX expands this spread greatly. Why? Because that mid strike at 700 is going to nada. It's going to zero, and you're going to have plenty of value left at 3 in the afternoon Eastern of that 20,625. And what you paid 93 cents for is going to be trading for probably multiple dollars. And that's the way I like to trade upside momentum. I shouldn't say momentum, I mean upside movement in the market when I'm not 100% sure if it's going to happen or not going to happen. And I always like to leave myself an out. Remember, I'm a big believer that the way you succeed in short-term options over time is to A, avoid losing trades, B, use structures that leave yourself an out so that if you're not right, you can get out with a small adjustment and make that trade from a loser to break even. So this is exactly the same type of thing we're talking about here. Again, I teach this all the time. If this doesn't move on Monday morning and the market is not looking like there's going to be any rally whatsoever, understand that the lowest strikes here of the BWB, which would be 625 here, they will still have value, hopefully about 80 cents to $1, and they can be moved up. I do that all the time, meaning that I want to get that 93 cents back because I don't think options are a binary outcome, and I'm not just going to say, oh, well, we tried, it didn't happen. No, absolutely not. We'll take the 625s and we'll push them up to 695, right up against that 700, get the debit back, and then, like I said, potentially try the trade again the next day or the day after that. Time now for our number one draft pick, some trade ideas for you. I'm very excited about this one because I really think this has potential to make everybody a lot of money in the near term, and we're going to be talking about not one, not two, but actually 3 ideas, all of which kind of come together, which is Bitcoin, MicroStrategy, and Coinbase. If you recall, Bitcoin was one of the first number one draft picks that we did on this program many months ago when we first started doing this show here in the new studio. And I'll be the first one to admit that did not work out at all, right? That test of that high 60s area, 68,000, 69,000, did not result in a breakout to new highs, and we have been consolidating ever since. So let's take a look at this Bitcoin chart now and see what may be different this time and see if this is the time when actually Bitcoin is going to make that move to new highs. So again, just to recap, when we first talked about Bitcoin, we were basically here in this consolidation and we were looking at 1, 2, 3, 4, 5. It was like the 5th test of the area, and we started talking about it here saying, this is it, we're probably going to go here, retest, and then we should go higher. As we can see, that didn't happen. And instead, we built all this pressure here of just straight consolidation in Bitcoin, but guess what? Where are we now? Once again, knocking on the door of 69,000. So it's either going to happen or it's not going to happen. We shall see. How to play this. This is very, very important. I'm going to be looking at 2 instruments here that I'm most interested in. I'm going to be doing /BTC, which are the Bitcoin futures. These are extremely leveraged, $5 per point. Be very, very careful. There's also a micro mini version of these. Those of you with smaller accounts, you may be more interested in the mini version. Less leverage, less risk. And I'm also very, very interested in MSTR, which, in case you haven't heard, it's pretty much the purest Bitcoin play out there. They have levered their entire balance sheet to Bitcoin. They've got billions and billions of dollars of Bitcoin on their balance sheet. And basically, when Bitcoin moves, MSTR moves a lot more in percentage terms. So I'm very interested in those 2. I do like Coinbase as well. It is not as much of a pure play, however, so just keep that in mind. But if Bitcoin breaks out, Coinbase should move as well. And as you can see from the action this week, if you've been watching Coinbase, it's already starting to move up pretty sharply. So how to play this? First things first, make sure that you choose an instrument that has expiry at least for the next 3 months. That means that currently the BTC contract that is the front month has about 7 days to expiry. You do not want this contract. You want to pay up a little for the next contract because you're going to need some time for this to play out, okay? Secondly, when you approach this line right here and you actually test that line, I believe you should purchase about 1/3 of your position right there, because there is danger that you will go back down, go back up, do some shenanigans. It's Bitcoin. It's a heartbreaker. It's just like gold. You know, it's sometimes it's not technical, sometimes it is technical, but the big technical picture here is the trend line break, and that's what we're looking for. So I'm going to be looking to buy just 1/3 of the position there, with the hopes that it actually starts to move without me, meaning without me being in the full position, and starts to dribble higher. And if it starts to dribble higher, I will do nothing but more or less probably just wait for this 74,000 area. That's 74,415, which is the all-time high in Bitcoin. And there, I believe it will make sense to buy the other 2/3 and have full position on for the potential breakout higher. How high that's going to go, I don't know. Nobody knows. I've been saying for a while that I do believe Bitcoin has the potential to double from here. If you look back historically, it does this in very short bursts, 3 to 5 to 6 days at a time. That's the whole move. So you could easily see a move of 75,000 to 125, 150 or whatever, but it will be over relatively quickly. And if you don't position yourself ahead of it, then you're going to miss it. So remember, this is the purest play. Obviously the coin itself, you can do that obviously on exchange. MicroStrategy, I think, is even better. That is a little bit more juiced up play, should move, and Coinbase should also have some upside movement if we get this support in Bitcoin here, especially if we break out to some new highs. I'd like to wrap up this program on a little bit of a psychological note. Those of you who have been trading for a long time, you've probably figured out by now that it's really all mental. I think this game is about 10% strategy and about 90% mental. And to that end, I just wanted to share with you an alert that I put out this week to my subscribers in Weekly Options Advisory. If you follow me on Twitter, my handle is right there in the Chiron. You probably saw this there as well. I was just talking about here on October 16th, earlier in the week, about how the ES and the NQ were pulling in opposite directions here. That is something, first of all, that has been happening a lot in this market. We've been mentioning this divergence for a while, obviously in the bigger picture of how the NASDAQ 100 is lagging the S&P by quite a bit, nowhere near that all-time high yet. But if you've been watching the market closely on an intraday basis, you know that the divergence between the NQ and the ES is getting very, very extreme. I can't really explain that. I don't know exactly why it's happening. Obviously, it's the 100 stocks in the NDX versus the 500 stocks in the S&P, and there's strength on one side and weakness in the other, and sometimes it flips where you have the 100 stocks stronger than the 500. But the point is, this is not an easy market to trade, so you want to be very, very careful out there. And I continue to say here, no idea what happens next. And just that part, I believe, is very, very powerful, because here I am. I'm supposed to be the pro, so to speak. I'm running an advisory. People are following my trades, paying me for the privilege of doing so, and I have no problem putting out there for all to see in writing. I have no idea what happens next. This was put out in the middle of the week when it was very choppy, so it's very, very important. You won't always know. Just be careful, and you don't need to have your pedal to the metal at all times. And the last thing here, which is super important, and you should really probably put this on a Post-it note on your monitor, because it really can save your hide, and it's one of the most important lessons that I think newer traders need to learn, and it will definitely keep you out of trouble, and that is simply that doing nothing is your superpower, all right? Again, doing nothing is your superpower. A lot of people are always focused on what to do in the market and not focusing enough on what not to do in the market. And this particular week that just passed is an excellent example of a week where I don't think there was opportunity to really press the bet hard, because as we just got through talking about in the technical part of the program, I showed you the S&P over the 5-day period. I showed you the NDX over the 5-day period and what really happened. Almost nothing. Did we make a new all-time high? Yes. Was there any follow-through, however? No. Was there any upside expansion of range like big body candle that would be constituting a follow-through today, as it's called? No. Just a lot of chop. Value on the profile was almost unchanged. In the NDX, that chop was even bigger, right? Larger ranges, piercing the 8 EMA, going back up. Not a lot happened. So you got to know when to hold them, when to fold them. And once again, doing nothing, that's your superpower. And that's my show for today. Thank you so much for hanging out with me, spending a little bit of your weekend here with Shadow Trader. I think we covered a lot in this video, right? Kind of trying to give you the gist of what happened this week and how I see the market going forward. I'm bullish, cautiously bullish, but still bullish. I don't have anything on the short side. I'm focusing on what's working. We've been doing a lot of stuff in gold in my advisory. We're definitely looking at these Bitcoin trades. We've got some short puts in Coinbase and MSTR, and we're definitely going to be looking for a bigger move to the upside, but we're being very, very selective here, right? Remember this next week, very, very important, October 23rd, the open house. Link is in the Chiron below, shadowtrader.net/open house. I hope you can all join us. It's a free event. Not going to be too long, about an hour, maybe 90 minutes. All of our traders are going to be going over current strategy, what's working for them in the markets. So definitely check us out there. All right. As always, hit the like and subscribe buttons and the little bell to be notified when Shadow Trader posts new content to the channel. As always, coming at you from beautiful Los Angeles, California, I wish you good trading and good night.